Shift focus to our conversation this afternoon, where we center our focus on credit access and digital financing. My guest is already on set, Kennedy Osore, Head of External Affairs at Tala, Kenya. Karibu sana, Kennedy.
Thank you for having me.
You said this is your first time in KBC Studios.
My very first time at KBC
How is your experience?
Studios. So far, so good. Very warm people. I'm glad to be here.
Good. Now, let's just very quickly move to this discussion. I mean, digital financing looks like to be the order of the day. I mean, we would say it is easy to access, it is affordable. But even as we gear towards the festive season, talk to me about some of those credit trends that you've seen, or borrowing trends that you've seen as we head over to this festive season.
We've actually conducted a survey just to check in with our customers so as to determine the kind of trends we are seeing. And it's interesting to note that at this particular, at least for the last 6 months, a lot of our customers have been feeling the effects of inflation. And this has particularly affected when they are accessing basic goods and services. However, we've also noted that despite that pinch that they are feeling, 80% of our customers are still confident that they are able to repay. And looking at that trend, and particularly moving into the holiday season, we expect, of course, there'll be a surge in borrowing just to cater for some of these expenses. And a lot of our customers are also borrowing to cater for things like education. I know right now kids are back at home, so it might shift more towards around personal emergencies, catering for groceries, catering for stock supplies, because we have customers who actually borrow to buy stock for their businesses. So we expect a surge, given that during this period there's also a lot of consumerism in the market. So a lot of these trends are going to be seen as we move into the festive season.
You've said that a majority from the survey you've conducted, that a good number of those customers borrow for groceries, paying of school fees, running over day-to-day activities, and that you're confident 80% of them are able to repay. Now, one would assume that when you borrow, basically, oftentimes it's for business, because a good number of times it will inject some profit, then you can be able to repay your loan. So if this is what a majority is borrowing for, how confident are you that then repayments will be made?
Maybe another interesting statistic I need to point out from the survey is that we actually noted around 51% of the respondents that gave us their response on that survey, they borrow to start or to continue their side businesses. So what we've seen is that, especially looking at the macroeconomic factors at the moment, there's a lot of strain, and even the inflation that I was pointing out. So a lot of people are experiencing income gaps, and they want to supplement their income. So the big thing we are seeing as a trend is people are borrowing to push through their side businesses. And ideally, if you're pushing through your side business, then it means you want to cover that gap that you have. So in as much as there's also a trend, particularly because this is a festive season, where we'll see a lot of it going more of the consuming side, but the trend over the past 6 months has been we are borrowing so that we are able to run our side businesses. So this festive season may be a bit of a different, because it's a different season, but the trend over time has been a lot of borrowing goes towards side businesses. And this is not necessarily just to your kawaida mama mboga. It's even, we've seen a trend where even salaried people, because of the income gaps that they're feeling and the shocks that are in the economy, they tend to have side hustles. And sometimes this money comes in for them to probably, if you have an example where you have a small, maybe you have a boda that you've put on the road, and you need probably 2,000 to fuel for a week as he runs around his business. You put that on the side. So we'll still see those two trends in as much as we are moving into the festive season, but a lot of also this borrowing goes into side businesses. And
I'd like you to elucidate that myth further, because then it's oftentimes come off as a myth that for Kenyans who are employed and are salaried, they don't borrow. This is just for any other Kenyan who perhaps is jobless, and that's oftentimes what we think. From what you've gathered, even as you look at digital financing, how do those numbers look like? And is that really the case?
So actually, it's something that needs to be debunked. I think the idea that people think when you only speak of a side business, or a business for that matter, for an SME, will be probably your kibanda there. But because of the reasons we are seeing around the strain on our incomes, because of inflation and other macroeconomic factors, a lot of even salaried people are thinking beyond just the paycheck that they get, because clearly these cannot sustain them throughout. So they're asking themselves, what other things can we do on the side? Maybe not directly themselves, they might have put somebody to just run that business for them, or it's something they are monitoring as they get flexibility within their day or the time that they have. So we are seeing a lot of that trend, and we are seeing even some of our good borrowers and repairs are actually guys who are able then to know that I have certain income that I expect at this point in time.
Yes.
So I will borrow to fill this gap and cater for that side hustle, and then once the money comes in, I repay.
So it's safe to say we are all borrowers.
We're actually all borrowers, and what we say at Tala is that we push for that responsible lending, so that, and a lot of financial literacy then has to go into it, because you don't just borrow for the sake of it. You borrow because you have a laid out plan and you know you can arrange your finances. And we actually help our customers, because part of the thing we are big at is beyond just extending financial credit, credit for that matter, and enhancing financial inclusion, is how do we push for financial literacy and financial health.
Just hold it there. Before we move to that bit of financial literacy, let me just backtrace a bit and stick on that debunking the myths, because then we have had conversations that when you look at the gender sector, women are more prone to borrowing than their male counterparts, as well as youths. Is that the case? If so, why?
We've actually done also some other different reports. So we have something called the Money Match report that we release in March. And we also have like an impact report that just goes to assess what is the level of impact in terms of how we extend credit, and what are the trends we are seeing even in the different categories of our borrowers. So as you've mentioned, we've actually realized that women are some of our good borrowers and repairs. And a lot of this trend is driven by the fact that in most households, women are the house managers. So they'll be very keen to see if we borrow for purposes of, for example, maybe stocking supplies in the house, then I have to arrange in a way that I know I'll be able to repay, because I'll need to do probably a similar thing the next time around. So they are more prudent in how they manage their finances. And this has gone even into how they do the side businesses. So if you think of your Mama Mboga there who's borrowing, they'll be very clear that I need, let's say, around 5,000 bob to stock up for the next 3 days. I've calculated how long it takes for me to probably sell off my stock. And then, because I have determined which date I need to pay back my loan, then I've put all that together. So we've actually seen that particular trend, specifically now focusing on women and how their trends in terms of borrowing and repayment.
So it's actually they borrow, there's a reason to that.
There is.
All right, let's make progress on this discussion and talk about the financial literacy, and more so in this festive season, because earlier on you had talked about we would largely see a good number of borrowings going towards the consumer side. But then how significant is it for financial literacy to be, how would I put it? How just important is it for this for Kenyans, for majority even of these borrowers to understand, to get that financial literacy, so that then they would even know if they're borrowing is for what purpose? And if you've done any kind of financial literacy, what has been the uptake?
So financial literacy, as you put it, is actually very critical in managing particularly personal finances. This could be even how you probably use it for your small business, or even in terms of the consumer aspect around this season that we are going into. So what we've doubled down as Tala is actually within our app we have a learning center that we've put in quite a bit of material just around how to manage your personal finances. And it's very tailored, because over time we've understood who our customers are and the kind of different activities they use when we extend credit to them. So we've put that into place, and they're able to access and then just interact and be able to manage their finances. Beyond that, we have a very dedicated customer support team that you can reach out to, and they'll be able to take you through even when you want a one-on-one, for them to just break it down to you, like if this is what you are doing and this is the credit you are asking for, how then do you manage in a way responsibly that you are able to then repay.
All right, Kennedy, we now want to wrap up this discussion, but I feel like it would be a disservice of me to finish it without asking this question, that we've seen this digital financial institutions really on the rise. What is this significant gap they are bridging that your traditional form of financing was not giving you, as we conclude?
There's an interesting statistic actually that indicates that there's a credit gap of around $300 billion globally for a segment that has traditionally not been served by traditional institutions like banks. And reasons for this, and it even goes back to why as pioneers in the sector we started digital lending, is because we realized there's a gap where, because of the kind of data you have to provide. Think of it like the way you went to a bank and you had to seek a loan. You had to go with a stack of documents just to indicate who you are, for them to know you, to assess your creditworthiness. They would ask you for your pay slips and whatnot. But there's a segment that was in the informal side of things that could not provide some of this formal documentation, but there still was a need for them to access credit to improve and better their lives. So that particular segment is still growing. The gap to be filled is still there. There's need to address it, and that's why you see there's a lot of credit providers still in the market, because there's still a whole pie to be serviced. But the idea here is not to just service credit for the sake of it, is to actually get to a point where we personalize it and you are able to meet the unique needs of particular customers, because then it becomes a more financial healthy way of going about it.
Okay, I hear you. Thank you very much, Kennedy, for your time, however much short it has been, but then you've gotten some 2 or 3 nuggets of wisdom there, as far especially financial literacy is concerned, as we head over to the festive season. That has been Kennedy Osore, the head of external affairs at Tala, Kenya, just talking to us about credit awareness as well as digital financing, even as we head over to this festive season. We now continue with our broadcast, still on matters